Mr. Chairman, and I'd like to thank you and the ranking member for holding this hearing today and for our panelists for taking the time to be here as well. H.R. 1553, the Small Bank Exam Cycle Reform Act, a piece of legislation I introduced with Ranking Member Clay, is a targeted relief effort for community banks. These small banks, which did not cause the financial crisis, are unfortunately suffering from the regulatory blowback. The legislation moves the asset threshold from $500 million to $1 billion for well-run institutions to qualify for an 18-month exam cycle. This proposal is based on no CC recommendation and will help alleviate the burdens on community banks as well as bank examiners, also permitting community banks to be able to focus their time and resources on the surrounding community rather than on the exam process. Mr. Ireland, appreciate your taking time to be able to be here today. One of the most pressing concerns that we hear from our constituent banks in my district is the cost of compliance, keeping in mind that these are small community banks that are locally owned and operated. Mr. Ireland, can you speak to on-site examination processes, and what are some of the requirements in terms of preparation for an exam and resources that are used for an exam?
Well, typically what will happen is that the examiners will tell the institution that they're coming in. They ask them to get together materials to respond to what they intend to examine, what they intend to focus on. And then they come on site and they're going to look at the bank's documentation, the bank's processes, the bank's procedures, depending on how they view those. It may be more intensive or somewhat less intensive. It is a time-consuming, costly process for the institution. I would point out it's a timely, consuming, costly process for the agencies as well. And what your bill does is requires them to more risk-focus their examination process on the larger organizations and more complex organizations where there are real problems. It's in their interest just as well as it's in the interest of the smaller banks.
So to be just common sense to be able to extend that for well-run banks?
I think it is.
Great. I appreciate your comments on that, and I would like to be able to maybe perhaps now move to Mr. Sharp. You'd cited in your testimony that the CFPB must respect the limits of its authority. And is it your sense that we're seeing the CFPB reach beyond what was original legislative intent?
Thank you for that question, Congressman. Yes, we are seeing that. Not everywhere, but we're certainly seeing it in a number of places. In fact, I'd submit that some of what we're seeing, again, in the indirect auto lending market is a result of the Bureau trying to reach beyond a limitation that Congress put in front of it, to regulate auto vehicle sales. They've used the lenders that they do regulate to sort of get to the auto dealers who were exempted under the law, and we have an issue with that, and there are several other examples that I'm happy to submit for the record if it would be helpful.
Great, and we would appreciate that. And I think that brings us to Mr. Miller, who had served here in Congress. We have one man making a decision unilaterally. U.S. Chamber of Commerce, others are noting going beyond legislative intent. As a former legislator who had sat in this committee, following your logic, can you speak as a former member of the committee on how that would benefit us here?
Well, first, I disagree with Mr. Sharp about the auto loan guidance.
Well, we can go on that, but I'm just talking about the policy of having power relegated to one person. How would that benefit us?
There are agencies that do it both ways. There are agencies that have a commission.
They do, but we're dealing with CFPB that has one.
And then there are agencies that have one. And there are some advantages in having a commission, as Ms. Pierce pointed out, and as I agreed, as Mr. Neugebauer said, it provides some more continuity.
You think legislative intent as a former legislator, Mr. Miller, ought to be respected?
I know very well the legislative intent. I introduced
and
the
should it be
bill.
respected, sir?
What's that?
Should it be respected?
Well, the bill as introduced is not the bill as passed. So the legislative intent
so you don't
is
believe
what
or you
Congress
do believe
did,
legislative
not what somebody
intent should be
earlier
respected?
said. What?
You do or don't believe legislative intent should be respected?
Yes, but
okay, I appreciate that. Now, if we were to empower Mr. Neugebauer with all of the power in this committee to be able to make the determinations on which bills are going to be moving forward, what is going to be heard, would you be comfortable with that?
Well, actually, that was pretty much my experience. I didn't always like it. Legislative intent is not what one or two members thought. It is not how a bill is introduced. It is what Congress did. It is what the bill passed. So the fact that the bill was originally introduced with a commission does not mean it was a legislative intent to have a commission when Congress, in fact, passed a bill with a director.
Time of the gentleman has expired. Now go to the gentleman from Pennsylvania, Mr. Rothfuss, for 5 minutes.
Thank you.